All right, here we go. Hey guys, my name is Brett Phillips, and I'm here with Russell Wallace, and this is Ask a CPA podcast. Thanks so much for tuning in. We appreciate you guys listening. And how you doing, Russell? What you been up to, man?
Been doing great. We've been gearing up for tax season. Been enjoying some winter weather. Kids have got basketball going on. So it's a busy time. Busy time.
Yeah.
What about you?
Yeah, same thing, man. I know you're a big golfer. We golf a lot together. What do you do in the off season? It's way too cold outside to go golfing.
Yeah,
I've gone out once and it was like frigid. It was not worth it.
Yeah, if you have to wear like gloves and stuff, that's not what I want.
Yeah.
I like golf to be outside, and just enjoy nature and kind of just forget about work for a minute and that sort of thing. And it's hard to do that if you're shivering.
Yeah. And the days are shorter too, right? Like the sun comes up later and goes down earlier, so it feels like the days are shorter. So it's tough, man. During the summer, I was going up, like getting up early and going out walking every morning and like exercising. And now it's like, God, it's cold and it's dark and it's
yeah.
What am I supposed to do? I just sit in bed and eat donuts.
Well, I just bought me a nice big Tim Allen toolbox, right? So I'm organizing on the inside of the garage, right? So that's what I'm, you can do that in the dark, right? But
Nice.
I'm pretty excited about it. I mean, it's a full on Tim Allen kind of purchase.
Which one did you go with?
It's the Home Depot one. I don't know the brands. It's the one you get
like
at Home
Craftsman
Depot.
or like a red one?
Yeah. It's bright and shiny.
Nice.
It's good.
That's awesome, man.
Yeah.
So you're a big tool guy. What's like your brand? Like everybody use electric, the drills and stuff. Do you have like a brand that you use for everything? Like I'm like a Ryobi kind of guy.
You're a Ryobi guy?
Yeah. Not very proud of it, but I'm also pretty frugal.
Yeah.
But although I have the Ryobi blower, like the leaf blower, man, that thing is killer. I love that. And it's, battery powered, so you don't stink like gas. I go out there and blow the leaves all the time. I'm on like an acre, and there's like huge trees everywhere. There's always leaves all over our driveway and stuff. I love going out there and blowing off the driveway. There's nothing better.
Yeah, a little instant gratification. Somebody hollers at you, be like, "What was that? I can't hear you."
This is what happens when you're in your 40s and you're like, oh, man, you see that new leaf blower? It's amazing.
Yeah. I like whatever you buy the batteries of, that's what you end up buying all of, right? And so I've got some Milwaukee tools, and so I went with the Milwaukee tools. It's a good brand. They sell a bunch of them at Home Depot. They got everything you want, and but mostly because I have a brother that has also got the Milwaukee tools, and it's like you can steal his batteries, and so he doesn't love it as much, but I think it's a great
guy,
thing.
So I steal my dad's.
There you go. All
my dad's stuff.
That's great.
That's funny. Well, cool, man. Well, as part of this podcast, people submit their questions through our website at askacpa.co, or they submit our questions through the YouTube channel, Instant Messenger, on Instagram, or any other social media channel. Jump on, follow us, and submit a question if you have anything pressing, whether it be tax related, accounting, finance. We've both been in this game for a long time. We're both CPAs. We've been practicing for like 20 years now, and I've had my own practice for 10 years. I think you're about the same length, Russell.
That's right.
And so we're pretty experienced, and we've seen a lot of these issues. So we're happy to share our expertise and answer any questions for you. So if you have a question, head over to our website at askacpa.co, submit your question, and you may be on the next episode of our podcast. So the first question we're going to jump into today is from Juan in San Diego, California. Juan asks, I run a small restaurant and we still take a lot of cash payments. What's the best way to report this income correctly while keeping things simple for tax purposes? Yeah, that's a great question. What do you think, Russell? Do you have a lot of cash payment businesses, and what do you recommend to your clients?
Yes, you see less and less of this, right? So like true kind of cash businesses, but restaurants are still a big one. So they still get a lot of cash payments. Restaurants and bars, those kind of hospitality businesses, things like that. Got a couple of clients who do a lot of fairs, and so they like
Wow, that's
like
cool.
state fairs. They travel around, those kinds of things, and so they get some cash payments in. So first, the number one thing that you should do is this is being recorded, so I want to make sure that we state that you should be reporting those cash payments, right? So that's number one, be reporting those cash payments. But it really is best to do that. There's a couple of reasons for that. One, you don't want to break the law, right? That's a big one. But then two, if you want your business to be valued for something, right, you're gonna have to show that you've got some revenue, and no buyer is ever going to give you credit for income that you say that you didn't deposit into a bank, right? That sort of thing. Like, it's just not going to happen.
Right.
You know, their view on that's going to be like, well, if you did that, well, that's great, but like that's a little upside for me. But we're not going to base this valuation on your just like imaginary cash receipts.
You just admitted you had tax fraud on your prior returns.
Yeah. We've got a little haircut on that valuation, but so keeping a good, like making sure this gets into a point of sale system, that sort of thing. That way you've got some record of it. This is a good idea too if you have employees. If you got a lot of cash changing hands, there's a reason these point of sale systems came into place, right? So the first cash register came into place specifically to stop employees from stealing. Like that was the main selling point behind the original cash register. And so it's good to have these kinds of controls in place so that you make sure that, you can't be stolen from, that sort of thing. It also helps, kind of keep your books in order, make sure you're recognizing that revenue correctly. And, we joke about, breaking the law and those kinds of things, but it's a real thing, So if if you're driving around with stuff that you probably can't afford to drive around in and you get audited, they're going to really be digging into those things, right? Like it's no, people aren't stupid, right? So you're going to pull up with a G-Wagon and say, well, we make $25,000 a year, like no one's going to believe that. And they're going to be looking pretty hard.
Right.
Do you have any cons to do with this?
Like Breaking Bad when they're like, how can we explain these new cars? Yeah, it's true. I mean, there's the IRS, they know what you can afford, and they'll if you report income too low for a period of time, they'll say, hey, how are you affording to live? This doesn't make sense that you're reporting zero income every year, and you have a mortgage payment and property taxes, and you need to eat. Like, how are you affording this without reporting any income? So yeah, that's a big part of it, is the IRS. The other part is cash, is that employees are just pocketing some of that money. So you want to deposit your cash regularly, have like a schedule where, hey, you do daily deposits, or if you have a lot of cash, or weekly deposits, or something where you're able to account for everything, get that money out of your business and put it into the bank. It's interesting with the whole cannabis industry. It's like pretty much like an all cash business, because these banks won't deal with this industry. So they're really having to be dependent upon, really tight regulations internally, like internal controls, to make sure that their employees aren't stealing from them, because it's all cash. It's a lot of cash. And that's especially when it first became legal. I think the banks are starting to be more receptive to allowing these companies to bank with them, especially on the local kind of community bank levels. But yeah, it's a problem, and you definitely want to have tight controls over it. If you're a small restaurant, it's probably, it's not these volume that some of these cannabis companies have, but still, your margins are tight in the restaurant industry. We work with a lot of restaurants, and your margins are tight. You want to make sure these deposits get put into the bank, so that, if you need a line of credit, or you need an SBA loan or something, that you can show a history of good financial reporting. Otherwise, you're going to be in a tight situation. And certainly don't go into your CPA and say, well, I have cash deposits, but those I don't have to pay tax on. You know how many times I've heard that? It's insane how many people come in and say that they don't think they have to report or pay the income tax on cash deposits. It's wild.
Yeah. Well, there's a rule, right? And the rule isn't that the IRS lists out everything that you have to pay taxes on. The rule is that there's a very, very short list of things you don't have to pay taxes on. So that the list of things you don't have to pay taxes on is very, very short, and that's what they list. And then everything else you have to pay tax on. So, yeah.
And cash is included.
This cash is definitely included. It's like the list is so short that, like, if you don't know you don't have to pay taxes on that, then you definitely have to pay taxes on it, right? Like, it's not even a question. It's not even a question.
Right. Exactly.
Well, we've got another question here from Tiffany in Seattle. So I need help. This is a good one. I like this. I do get this question quite a bit, as I'm sure that you do too. So I need help for my growing business, but can't decide between independent contractors and employees. What are the tax and legal differences I should consider? So what advice do you have for Tiffany here in Seattle?
Yeah, this is a great question. We get this a lot too, especially with new companies. They're just starting off, like they're not sure if these are employees or they're contractors, and they're not sure, what the financial requirements are going to be if they hire an employee versus a contractor. But the IRS is pretty clear that if you provide, they have a list of items, and they say, if these criteria appear with your employee or with your person that's working for you, then they're probably an employee. So if you control their hours, if you control the tools that they use, if you tell them, hey, you're going to come to our office and you're going to work from 9 to 5, this is an ongoing job. There's no like cutoff of like, hey, when this project is complete, this job is complete as well. All these kind of factors go into determining that somebody is an employee versus a contractor. And a contractor is more, a 1099 contractor is more somebody who is, you say, okay, here's a job that needs to be done, and they can come in, do it whenever they want. They're going to bring their own tools. They're going to do it themselves. They kind of work their own schedule, and they'll say, okay, here's the finished project. And you can say, okay, great. And you may wait 3 weeks and then give them another project, right? So it's not like an ongoing, they're showing up 9 to 5 every day. If you have somebody showing up 9 to 5 every day, they're an employee, and you need to treat them like an employee. If they're coming to your office and they're working and they're representing you, they're wearing your shirt with your name on it, they're an employee. They quack like a duck, look like a duck. It's a duck. There's no way you can get around it. And the IRS would rather these people be treated as employees versus independent contractors, because you're withholding federal income tax from them. You're paying their Social Security and Medicare, their FICA taxes on their behalf, and you're submitting payroll taxes, biweekly, which the IRS likes, rather than somebody who's an independent contractor who can say, hey, I have all these expenses that are going to offset my income, and then I'm going to pay a little bit of tax based on this net amount that I have after expenses. So, if depending on, did she say what kind of business she has?
She didn't say what kind of business she had specifically.
Okay. But if you're a restaurant and you have people coming in working certain shifts, those are all employees. What are some good examples, Russell? What do you see in your shop?
Yeah, so we do a lot of we've got a pretty large healthcare practice, and we also do a lot of work for the trades companies. And both of those industries have a lot of independent contractors, or people they pay as independent contractors, who really aren't independent contractors. In the trades, if you have somebody that's licensed and they're driving your truck, they're using your tools, you're telling them where to go. I mean, that's an employee all day long, that sort of thing. It's in the past, it's been a really big thing to pay doctors as independent contractors. But again, you're telling them when to show up. You're providing everything but the stethoscope, right? And it's kind of tough to say they're providing. They're like, yeah, but they have this one thing wrapped around their neck, and that's that makes them an independent contractor. They're providing their own tools. The advice I give to clients all the time is if you get into an audit, an auditor is just going to be sitting over across the table from you, right? And so it's another human being, right? So if they're not going to believe you, if you wouldn't believe you sitting across the other side of the table, then they're not going to believe you. They're not big dummies. And And where I see one of the things that I think can get people in trouble that I see a lot is that, as kind of the industry and our advice is changing, like, we do a lot of advice on tax planning around things like qualified plans, like setting up a solo 401k, those kinds of things. Well, so now you're going to have penalties for payroll taxes because they should have been employees. So now you're responsible for that whole 15% if they then declare them as employees and they want to go back. So it's not a thing where like, hey, you get to charge your employee the 7.65% and you pay your 7.65%. Now you're charged the whole 15% plus the penalties, those kinds of things. But then they can also hit you with the fact that, hey, you had this 401k plan, so now you've been discriminating against them, and these are really, really big penalties, right? So like the per day penalties and things like that are pretty egregious, and they're not really meant to catch these kind of smaller infractions like this, but then you find yourself caught up in it, right? And so clients of mine that set up these kind of plans are great retirement planning tools. It's a great way to put a lot of money away. And there's ways to do it for the business owner themselves. They can do a lot of money into these qualified accounts, but there's some rules that come along with it. And, kind of playing this game of contractor versus employee it's just never good. So the other question I get a lot, because we have a healthcare practice, it's people asking, hey, should I be a contractor and employee, right? And, one of the things I always tell them, I was like, look, there's a reason that employers want you to be a contractor, right? Like, and that's because they can save some money, right? And so as the gig economy has gotten a lot bigger and a lot more people are doing these kinds of things, I'm seeing this a lot where it's people that can maybe kind of like maybe in the gray a little bit, or maybe somebody gives them a choice to be a contractor or not. But it's almost always better if someone else is paying your payroll taxes for you. It just almost always is. And
I think that they will realize that when they go to collect Social Security in 30 years, and they say, I was making all of this money back then. Why don't I have a bunch of Social Security paid in? It's like, well, you chose to be an independent contractor. You minimized your tax liability by minimizing the amount of Social Security tax you paid in. Well, now you don't have any Social Security benefits. And that's kind of the flip side of the coin, is that to minimize your taxes now, it's going to cost you something in the future.
That's right. And so I would say, to people like Tiffany and to others out there, really think kind of hard about, are these people contractors or not? You don't see a lot of these kind of audits, going around. I've been a part of a couple of them. And what happens is that it's really difficult to defend contractors once you get into these audits. And, you're almost always, once you get in there, you're almost immediately negotiating, penalty abatement and things like that, right? Like it's pretty clear once you get into an audit, like you're going to lose. So
unless they come in and say, here's my LLC, I'm doing this specific project for you. I'm not working in your office. I have my own computer. I have my own supplies. I'm totally independent. That's a great one. I have other clients. I'm not working for you exclusively. Then it starts to look like an actual contractor, and that could probably, be argued successfully. But otherwise, you're flirting with some bad news. I mean, you don't want to do that. You don't want to be caught. You're right. They don't go after it very often, but when they do, especially if you've made retirement contributions, like great point. If you've made retirement contributions and overfunded, the owners, you're really asking for trouble.
Yeah, you're gonna get hosed. It's gonna be a bad day. It's gonna be a really bad day.
Well, cool. That was a great one. I appreciate. That's it, right? We got two. We knocked them out.
Yeah.
Piece of cake.
Well,
cool, man.
We appreciate these questions coming in. So, guys, keep them coming. AskACPA.co. That's AskACPA.co. So, drop your questions in there. Like and subscribe these episodes so you catch all the new ones coming out. We try to put these out pretty regularly. So, we're having a lot of fun doing it. So, I think, we're just going to keep this going and keep putting them out as fast as we can. And So you can leave your comments and questions, askacpa.co, or on any of these videos, YouTube channel, those kinds of things. Drop your comments in there. And so we look at those all the time. And we really have enjoyed kind of like, talking back and forth with some folks on some tax problems.
Absolutely. Yes, it was a lot of fun. And we appreciate it. Thanks, Russell. It's a good time, buddy. Good catching up.
Yeah, absolutely. We'll talk to you soon.
Talk to you soon, buddy. See you.